Okay, let's be real. For any CPA firm, profitability is the name of the game. You're selling expertise and time, and every minute that goes unbilled, well, it's just gone forever. But what if the very tools you depend on every single day are actually, kind of secretly, eating away at your bottom line? Let's talk about how to get out of that spreadsheet chaos and actually start tracking your profitability in real time.
So what's the real cost of doing things the old way? Well, for a typical small, three-person CPA firm, the average profit just leaking out the door is a staggering $78,000 a year. And this money isn't just disappearing into thin air. It's vanishing because of things like scope creep that goes unchecked, staff inefficiencies, and of course those painful write-downs that you only find out about when it's way too late to do anything.
And that, right there, brings us to the big question. It's really easy to look at that number and think, nah, that's not us. We're on top of it. But these profit leaks, they're often invisible, you know? They're buried deep inside all those manual processes and systems that don't talk to each other. It really makes you stop and think, doesn't it? How much of that 78 grand is slipping through your own firm's fingers every year?
To really understand how this all happens, let's just step into a real-world scenario. I want you to meet Maria Martinez. She runs her own solo practice. She's got one staff accountant, and like so many CPAs, her tax season is just this frantic race against the clock, all held together by this fragile web of manual work and spreadsheets. This quote from Maria just hits the nail on the head. Her frustration is felt by countless small firms out there. It's this complete lack of a single, real-time picture that just fuels the chaos of tax season. It leaves partners constantly playing catch-up, always asking, hey, where are we with the Johnson return? So, what does this manual chaos actually look like? Well, take a peek at Maria's typical Monday morning. It's a 2-hour ordeal, seriously. She's exporting data from her practice management software, then she does it again from QuickBooks, and then she has to painstakingly piece it all together in Excel just to get a basic idea of where each project stands.
And here are the consequences of that 2-hour routine. First off, the data she gets is already days old. Any write-downs are a total surprise when it's time to bill. Client relationships get a little tense from those last-minute, hey, I need this document now requests. And of course, it leads to partner burnout from 70-hour work weeks. All of that culminates in a pretty dismal 68% realization rate. Ouch.
Now here's the most important takeaway from all this. This is not a people problem. It's a systems problem. Maria's manual grind is just a symptom of a much deeper issue. All her critical data is trapped in these disconnected silos, and this fragmentation, this is where the real damage is happening.
For most CPA firms, this is just reality. You've got your practice management software over here for workflow, you've got QuickBooks over there for billing, then there's your tax software, a client portal for docs, and of course, good old Excel, the manual glue desperately trying to hold this whole thing together. Each system has one little piece of the puzzle, but none of them are talking to each other.
Let's just take your practice management software. It's awesome at telling you the status of a job, right? Whether it's in prep or under review. But what it completely, totally misses is the financial health of that job. It has zero idea if you're actually making money on it. Then you swing over to QuickBooks. It knows everything there is to know about invoices and payments, which, hey, is great for accounting. But it's completely disconnected from the actual work being done. It doesn't know the time budget for an engagement or how far along the team really is. It only sees the final score, not how the game was played.
And this problem just repeats itself over and over. Your tax software knows the return status, but not how much time was spent. Your client portal knows when the documents finally showed up, but not how that delay blew up the budget. It's just this constant broken view of what's really going on.
Okay, but what if you could just smash through those silos? What if Maria's Monday morning could be transformed from that 2-hour data entry marathon into, say, a 15-minute strategic review? That, my friends, is the power of bringing in an automated, unified system.
And this is the after. Just imagine seeing this dashboard every single morning. All your active jobs right there in one place. You can instantly see which ones are on track, which ones are getting a little risky, and which ones are already over budget. It finally connects the workflow to the money in real time.
I mean, the contrast is just night and day. Maria's new routine is only 15 minutes. Instead of fighting with spreadsheets, she's reviewing AI-driven insights. She's transformed from being a reactive data processor into a proactive business strategist. And this all happens before she's even finished her first cup of coffee.
So what was the actual tangible impact of this change?
a remarkable $9,200. That is how much revenue Maria recaptured in her very first tax season, just by preventing write-downs. She could finally have those important scope conversations with clients before the work was done, not during that awkward surprise billing conversation later.
And what about the time she saved? An absolutely incredible 96 partner-level administrative hours over the 12-week tax season. That's basically 2 full work weeks of her most valuable time that Maria got back. Time she could use to focus on what actually matters, advising her clients and growing her firm.
And here it is. This is the ultimate measure of success. Her realization rate jumped from that chaotic 68% to a much, much healthier 83%. That improvement alone represents thousands of dollars flowing directly to her bottom line, all from simply having visibility and control.
Okay, so this all sounds great in theory, but how do you actually make it happen in the real world? It's really not as complex as you might think. We can actually boil it down to a simple 3-step blueprint that pretty much any firm can follow. First, you just configure your data source, in this case QuickBooks, with a few custom fields so you can track status. Second, you build the dashboard by connecting your data to an automation script. And third, you turn on the real-time alerts. And that's what turns your system from just a passive report into a proactive watchdog for your firm's profitability.
And just so we're crystal clear on why this matters so much, let's talk about this core metric. The realization rate is everything. It is the ultimate measure of your firm's health. A high rate means you're efficient, you're pricing things right. A low rate is a massive warning sign that profits are just leaking out all over the place.
So let's just end with this thought. It's not really about the numbers, is it? It's about what those numbers represent. What would you do with that recaptured time and revenue? Would you hire another team member, invest in some new tech, or maybe, just maybe, take a well-deserved vacation after April 15th? The power to even make that choice. Well, that's what this is all about.